You're 60 years old right now and you're wondering, how do I actually save for retirement? How do I actually create a retirement for myself at age 60? I'm going to talk about how you can actually do that, and I'll even give you a little sneak peek into something that could be a cool strategy for you to be able to use right now. All right, so you're probably at the age at this point where you're 60 years old. You're probably wondering, is it too late for me? Do I have enough time to save? Because I feel like I'm far behind. Just so you know, you're not alone. There are so many people now. Just so you know, the average 65-year-old only has about $300,000 or so in their retirement accounts. Now, the problem with this is, of course, if you are feeling like you're behind, there is still hope. But it's going to require you to do things differently than what you were taught really for the last 30, 40 years of your working life to do. But there is actually hope that you can do it faster. And in fact, you might be able to find out that it may not be a hopeless situation after all. So this is what it is. And I'm going to give you one strategy, by the way. This strategy can actually help you accelerate, get there faster, even using your 401k. All right, so let's talk about this today, because if you are 60 years old, you're wondering if you're behind or not. The truth is, if you're wanting to live out a certain type of lifestyle, you got to have about 30 times more money if you're doing traditional mutual funds. You got to have about at least 30 times more money than what you want to live on each year. So if your goal is to live on $60,000 a year, you got to have roughly about $2 million to do that, because you should only be pulling off roughly 3% a year. Now, some people will say the 4% rule. You might have heard that before. By the way, first and foremost, it was never a rule. It was actually something that a guy in his 90s, in the 1990s, came up with, and he was taking information between 1926 and 1976, which, by the way, 1976 was just a few years after the gold standard was taken off the US dollar. So we saw inflation roar after 1976 and become much bigger. We also saw people's life expectancy go up after 1976. So this is why the 4% rule, as they call it, has been debunked. It's actually more like 3% if you're in your 60s or 70s. Now, maybe if you're in your 70s, 4% rule might still work as long as you don't live too long, right? But if you were trying to live more of a stress-free life, you're only supposed to live on 3%. Now, I will tell you, there is hope outside of that world. You can do it faster. But I wanted to just kind of meet you where you are right now, because you're probably thinking, all right, I've been saving hard, but I don't know if it's enough. And this actually happened with one of my clients. He had just turned 60, just retired from the military, had $1 million in his retirement account. By the way, just so you know, $1 million is an amazing accomplishment if you happen to do this. Now, if you haven't hit $1 million, don't worry, you're not alone. Most haven't even got close. For him, he completely destroyed the odds. Because what did he do before Y2K? He just had a feeling, it's like, oh, I'm going to move my money away from stock investments in 1999. So right about 1999, going to 2000, he moved his money out of stocks, the market tanked, and then when it tanked to the bottom, he went back in again. So he essentially kind of sold high, bought low, sold high in this way, right? Well, then again, in the Great Recession, right in 2007, he said, you know what, I'm just gonna move my money out of the stocks, did it again, and then he went and moved it back into stocks in like 2009. This guy had like the perfect Nostradamus type of predictions here, and he didn't even think it was like about the market. He just said, oh, I'm just gonna move it now. He just got lucky, and he happened to save up $1 million. So he's feeling pretty good, like, okay, I've got $1 million, now what? He goes to talk to his financial advisor. Financial advisor says, yep, well, that means you can live on $30,000 a year. He said, listen, I live in California. Nobody wants to live on $30,000 a year in California. Even homeless people have a hard time living on $30,000 a year in California. And so he said, like, I want to do something else. And so he started looking for other answers. Like, what else can I do? And that's when he actually found our podcast. He heard me on another podcast, followed our podcast for a while, and then he reached out and became a client of ours. We actually consult clients, just so you're aware. We consult clients one-on-one, help them create a game plan, help them strategize. We're not investment advisors. We don't say you should invest here or there, but we do say, based on your situation, here are the kind of investments you can do that are outside of Wall Street, especially when you can't trust Wall Street right now. Here's the things you can do outside of Wall Street that can actually generate income for you. He actually started doing things with real estate. So he had real estate backed investment versus stocks that really aren't backed by anything. And so he went and did that, and his $30,000 a year instead became over $100,000 a year in these different types of investments, everywhere from different types of rentals that somebody else property managed. He had money in apartment buildings that he shared ownership in, but he didn't have to find them or buy them. Somebody else dealt with all the work. He even did things in the oil and gas space. Again, he was a passive, hands-off investor, but was able to get this $30,000 up to over $100,000 a year doing just that. And that's why I say there is definitely hope. There's definitely ways you can do it. By the way, I'm just going to say this now. If you're wondering like what kind of passive income could be possible in your situation, go to moneyripples.com. There's actually a passive income calculator that you can see what's possible for you in the next 12 months. And so that's a great calculator to use. Make sure you fill it out completely and accurately so you can actually get that good number to see what's possible. But it's shocked people, definitely shocked people. I had another woman who was 55 years old, had only $250,000 saved up. And she said, okay, Chris, well, I was talking to my financial advisor, I'm hoping and praying that in 10 years, if I save enough, I'll be able to live on $2,000 a month, about $24,000 a year. And I said, okay, well, that's interesting. 10 years, you say? She's like, yeah. He says, if I keep saving. Well, why? Because if she wants to live on $24,000, she's got to save, really with inflation, a lot more than just $700,000. She's really got to save more than that, right? So I said, you might have to get up to over $1 million by that point to then live on that money. But yeah, if you basically quadruple or quintuple your money in 10 years, you could get there doing traditional investments. But go with me on this. Instead of focusing on the compound interest theory and all that kind of stuff, right? Yes, that's true. But many people buy into that fallacy that you got to just compound it and then live on less of the interest so that you don't run out of money. I said, but here's the thing. It's always about income, isn't it? She said, yeah. I'm like, let's do the math. Let's just say you have that $250,000 and you get into an investment that pays you income at 10% a year. What is that? Well, that's $25,000 a year. Right. And how much is that per month? Just over $2,000 a month. I said, exactly. So you're hoping to quadruple or quintuple your money, chasing inflation like a Dalmatian after a fire truck for all these years. You're trying to get to that point only to find out that you might get it there, but you have to quintuple your money. That's hard to do. And the stock market, it's not like you can tell them, hey, can you please quintuple my money? That'd be great, thanks. You can't do that. But could you do this in actually a year? She's like, wait a minute, is that even possible? That sounds almost too good to be true. I said, well, it sounds that way, but it's just math. There are real estate investments that pay at least 10% a year consistently. I know, I'm in them. I've been doing it. She's like, well, I can't promise anything. There's always risk, but yeah, that's what you can actually do. If you want to be safe, maybe go 2 years and keep reinvesting. So you go a little bit above $25,000 a year. You could do that too. And it blew her mind so much that by the time she went to talk to her other girlfriends that were her own age, they talked her out of it. They said, no, just keep doing the stock market stuff. It's got to work. Even though you look at the actual statistics, people are not retiring very well financially into retirement, despite saving up everything they possibly can. So the thing is, there are different ways to do it, but it can't be done in the financial advisor world. That's what I was doing. That's what I was doing 20 years ago. And when I couldn't even get my dad, who had saved up everything, he was the cheapest son of a gun you ever met, saved everything he could possibly. He even paid off all of his debt early, including his house. And I had to still tell him, Dad, you're going to run out of money in 5 or 6 years at this rate, even though you're 61 years old. I didn't have a good answer for him because he did everything right from what I taught as a financial advisor. What I then later learned is that you can't find it in the financial advisor world. You've got to do something that's outside of it. Now, can you do stuff with IRAs and 401ks? Yes, you can. But it's not going to be investing in the traditional mutual funds that are high risk, mediocre returns. And you know this. If you're in your 60s right now, you already know that you're waiting for the shoe to drop, aren't you? You know that the stock market's been up way too high for too long, that after the last 16 years, we've seen 15 up years, 1 down year. You know that's not natural. You know that's way out of whack and that it's got to come back into balance again. So you're waiting for that shoe to drop, aren't you? And you don't know where to go. You don't know what to invest in. You don't know if you should even keep your money in the stock market or not. But if you put it in bonds or whatever, treasuries, will you make enough money? And that's a great question to ask. And the answer is no, you won't. But there are other alternatives where you can actually create more passive income, doing things like real estate investments. And not just any real estate investment, not buying the property in your backyard, but actually doing passive investments that actually can pay potentially double-digit returns that actually provide income right now. Now, I actually had another client as well that she was in a situation, she was actually in her mid-50s as well, like this health coach. She was in business for herself, but then she said, I don't know if I want to keep hustling in my business. Funny enough, I actually met her through a business coach who was training her to to really scale up her business. And then she decided after that, she said, I don't want to scale up. I want to kind of relax. I want to move to Bali. I said, well, let's do it. So here's what we did with her. We said, all right, let's take the money you got. She had some money sitting in savings. Like, let's get that out. There's about $250,000 there. We also had her sell her house in Portland, Oregon, which is where I grew up. Sold her house, got the equity out of it, took all that money and invested it to then generate over $3,000 a month for her. Cool thing is she only needed $1,200 a month to live in Bali, but as a single woman. And the great thing is that that $1,200 including doing like some scuba diving and things like that. So she still enjoyed her life, would still fly back to the States, still to this day has been living in Bali for like really 6-7 years, flying back and forth, visiting family and then going back to Bali and enjoying life. So that's kind of possible. I've had people retire early in their 30s and 40s. Heck, I was able to retire twice by the time I was 39 doing these same strategies. It's not just me, it's so many other people have done this. Now, as I promised, I mentioned about the 401k. I'm not a huge fan of the 401ks. And here's the thing, if you're over the age of 60, in 2025, you have the ability to save even more. You can actually save about $34,000 a year into your 401k. That's awesome. That's great. Now, you'll have people tell you about getting the match and everything, but the truth is that you're at a point where putting your money away to really defer tax till later, which then you're only going to pull it out and then pay taxes in just a few years, it makes less and less sense to put money in a 401k. Unless this one thing, and this is what I want you to do as a piece of action. Besides going to our website, moneyripples.com, try the passive income calculator, go try this. Go ask your 401k plan administrator or whoever has your 401k, ask them, do you allow what are called in-service distributions? Do you allow in-service distributions? What is that? It's the ability to withdraw from your 401k while you're still working. Did you know that usually when you get over the age of 59 and a half into your 60s, a lot of companies will allow you to pull out X amount of dollars, sometimes almost all of the money out of your 401k. Give you an example. I had one client where he was 62 years old at that time. He had stuffed money in his 401k since the mid 80s, since they started offering 401ks. He'd been stuffing it away, realizing it wasn't enough. I told him, go to talk to your employer about these in-service distributions, the benefits manager. He did. They said, yes, you just have to leave $3,000 in there. He had $400,000. You know what he did with that $400,000? He went and he bought over $1 million of real estate properties. Almost overnight, he went from $400,000 to over $1 million of real estate value that he had. What's even cooler, as I said, now you could do this. Now go put your money in to get the match. So he went to put it in to get that 100% match, and then he could pull it right back out. See, the biggest risk people have is they go to get that match, but there's no benefit. It doesn't compound. But if you can go put in $10,000 and get a $10,000 match, pull it out, you got $20,000, you can now invest outside of the 401k. Yes, you'll pay taxes when you pull that money out, but who cares? Because guess what? You're not gonna be paying 50% taxes. You're gonna be able to pull that money out and invest more money right away to begin invest for cash flow. So that's one great strategy we have a lot of our clients start to implement if it's allowed. Again, not every employer does it, but many do offer these in-service distributions. So that's the secret strategy I was gonna tell you about. Go check that out because you can then get your money in, and a lot of times if they allow you, pull it right back out, maybe a month or so later, to then go and invest in other things. So again, if you want to be able to learn how you can do these kind of things, subscribe to this channel, Money Ripples channel. We have lots of different examples of how you can create passive income now, not later. And of course, like I say, go to moneyripples.com, try that calculator today.